Good evening and welcome to Asia Society France. Delighted to have you all here. We're going to speak in English first, and then when you have questions, you can ask them in French. But you know, this is our working language here at Asia Society. I hope that's okay. Alicia speaks all languages on Earth. She's multi-skilled, multi-languages, and very happy to welcome her and welcome all of you to discuss so many issues. And Alicia is the Chief Economist for Natixis CIB in Asia. She's based in Hong Kong. She just arrived in Europe yesterday. She's also an independent board member, a professor at Hong Kong University of Science and Technology, a senior fellow at the think tank Bruegel in Brussels, and also at the East Asia Institute at the National University of Singapore, and many other titles. If you follow her on Twitter or on LinkedIn, you know that she's a top voice on the Asian economy, and especially on the Chinese economy. If you look at her recent publications, it's very diverse. It goes from demographics, China's industrial policy tools, why it matters for Europe, de-risking and decarbonizing, a green tech partnership to reduce reliance on China, and also India-China competition. So such a large range of interests, and it's tempting to ask Alicia to cover all of them. But when we prepared for this, we thought that since a number of people here are in business, most of you are in business, and some of you are investors, that it might be useful to discuss the investors' climate, especially at a time when protectionism is a word that is no longer a dirty word, apparently. We've just heard new measures imposed by the European Commission on Chinese electric vehicles. We've just heard, you were just telling me that in Spain there might be some repercussion on, from China on agricultural products, food products. And of course, here, some sectors are very concerned also with possible retaliation on spirits, and particularly cognac, it appears. So perhaps we could start asking you how you, since you just arrived from Hong Kong, and you also spent a lot of time in Taipei, and you've been traveling across Asia for many years, what is the atmosphere in Hong Kong in terms of investment climate, and what would you say to European investors who are wondering where is a good place to invest, and what is the current state of mind of people in Asia? Since here, we are all shocked by the result of the election. Some people might not be shocked, but obviously, the European context has sort of taken over many political debates, but we're here to talk about Asia, of course, and so perhaps you can give us an overview, and then I'll follow up with some questions, and then we'll open the floor to everyone.
Well, first of all, thank you. I hope you can hear me. Thanks for the invitation. It's a pleasure. It's the first time I share views with the Asia Society, and actually not really true, in Hong Kong.
In Switzerland also.
In Switzerland, that was a podcast, but I mean to say in Paris, this is my first time, hopefully not the last. Hopefully I won't bore you too much, but let me go straight to your question. So the question really is, what's the environment, what's the feeling, what's the vibe for investors into Asia? Well, if I narrow it down a little bit, into Greater China. Let's focus on Greater China first. That's Hong Kong. Greater China used to include Taiwan as a very different animal now, because there's a lot of money going into Taiwan, stock market, AI revolution, money leaving Taiwan into Japan, US, new supply chain, very interesting one. But the question is, I guess, Hong Kong and the mainland. I think when one looks at these two investor, two types of investor, portfolio investment, so equity, fixed income, or real investors, so companies going into the mainland or mainly into the mainland. Very few companies going to Hong Kong, but a lot of portfolio investment goes into Hong Kong. Well, what we know is that portfolio investment into the mainland has been stagnant for quite a long time. The peak was actually 2022, early 2021. And then again, when China finally ended zero COVID policies, there was a window of opportunity in December 2022, January 2023, and it ended there because two reasons. I think the degree of policy uncertainty is very high. Second, the economy did not recover as much as expected. And I would add, if I may add a third, basically the interest rate differential with the US has only increased. I mean, China is basically in a mode of making it easier for companies, so lower interest rates, while the US is so it's just not so appealing. And of course, investing in equity markets in China has proven to be not very successful in terms of profitability or basically profitability, whether it's China or Hong Kong for that matter. We're back to 2005. Not only that, the RMB is back to some. So both the currency is weak and the equity markets have not performed. So for all of these reasons, I think the environment is pretty, cautious. Everybody's now waiting for the third plenum, see if something big gets announced and we can jump into the market. Will there be finally stimulus to support the third plenum? So everybody's wait and see on the portfolio front. Waiting for the Fed to cut, waiting to have better financial conditions in relative terms. Now, foreign direct investment, I think the best thing you can do is to read the European Chamber survey, where it is very clear that it's basically never been worse. It's only 19% of European companies are very comfortable with the Chinese market, and the rest are increasingly reluctant. I would say they are exiting. That's a different topic, but they're not pleased basically with their results and the regulatory environment in China. So for me, it's a wait and see overall. Everybody's waiting and seeing, but we've been waiting and seeing for a long time. That's the difference. So for how much longer? And this is also Hong Kong, let's be frank. So now, what else are companies doing? If I may, companies are looking for the China plus one. That's basically, that doesn't mean leaving the mainland. That means having a second option. And this is true both for Western companies as well as Chinese companies for different reasons. Chinese companies, China plus one is mostly Mexico, Vietnam, increasingly Malaysia. And they're just trying to bypass our protectionism, to be very frank. They're trying to bypass Biden's tariffs, our tariffs to come, and they feel that that's the way to do it. To just invest. It's like the flying geese in Japan in the 80s. It's not very different. Now, China, for us, for the West, China plus one is a very different animal, because it used to be always sure Vietnam, but we go there and it's packed with Chinese companies. So we're like, okay, where are we going? For the US, China plus one is clearly, and we wrote a report today on this, South Korea. South Korea. Because what they're looking for is not necessarily nearshoring, friendshoring, low end. What they want is high end. They want batteries. They want, they want things that not everybody can produce easily. South Korea can't. And that's why they're giving them, of course, privileged access to IRA, Inflation Reduction Act. And South Korea is really a big beneficiary. The second is Japan. Taiwan and the US are investing in Japan. Microsoft is investing in Japan. Everybody's investing. It's very cheap for that matter. And secondly, it's a clearly separated ecosystem. The only low wage economy that is really a China plus one for the West is India, clearly. And this is because India is, in a way, orthogonal to China. So everybody knows that if you invest in India, that's not going to be Vietnam. You're not going to risk ending up in the same ecosystem. So for me, it's quite clear. We all have China plus one policies, but we mean something different. China is looking for certain countries, we're looking for others. But this process of reshuffling of the value chain is happening. We cannot deny it. And it's very important for Europe. I feel Europe is missing the boat, sorry to say, of realizing that this reshuffling is happening. We're a little bit slow in seeing this. And I think it's very important to kind of jump on. I would say one, you can still be in China, but you need to have an alternative, because that's what the US is doing. And that's what Japan is doing. That's what South Korea is doing. So, I mean, I doubt we can argue we know better in that part of the world. Yeah. So I think we need to really work on this reshuffling, in my view. And I'm going to stop here because you told me 10 minutes, and I think I've been more or less 10 minutes, and happy to talk about other things, other questions.
You just mentioned that Europeans are a little bit too cautious, maybe. Now, how much does it have to do with the EU's sort of policy towards China?
Yeah.
I mean, we just had, President Xi Jinping visiting 3 European countries, as you know, France, Hungary, and Serbia. On the official side, they don't want to speak about decoupling. I mean, we all know that the official policy is actually de-risking, not decoupling. But I mean, does it affect investors' minds? And does it mean they are cautious because they feel perhaps the China market is still open for business, and that's what maybe the Chinese side is telling them? I'd also like to hear your views on Hong Kong, because Hong Kong is also a very interesting place. Where it used to be very international. It's much more China dominated now. That's where you're based.
So I guess there's 3 types of companies approaching that question. Yeah, de-risking versus the China market. Well, first of all, some companies don't think we can force de-risking, to be frank. The US can, but we can't. There's a lot of underwhelming impression of the EU's ability to de-risk, and rightly so. Yeah, and if you look at the US is indeed reducing imports from China. It's reducing investment into China. We are increasing imports from China. And our investment, in some sectors coming down, but Germany, for example, is still growing. So, it's not clear we're de-risking in any way. And so first, I don't think our companies are taking our de-risking too seriously. We have these countervailing duties now, but they're low. Even Turkey has 40%. Announcement of 20% import tariffs while we're dealing with 18 for PYD is very low. I mean, I'm saying it should be higher, but I'm saying, let's face it, it's not high compared to international measures being taken by others. India is higher. Well, so because of the risking is so underwhelming, the question is, so in the trade-off, if you are, so the first type of company, you're already very exposed to China. You're BASF, you are Volkswagen, you're Mercedes. Nothing's going to make you change that decision, because it's the stock of investment. It's not the flow even. Yeah. So have a huge stock of investment. Somebody out there talks about de-risking. You're just like, what is this? I mean, I'm de-risking from you, Europe. But I'm already fully exposed to this market. So I say that because, as you know, Kalenius, CEO of Mercedes-Benz, actually said that he'd rather de-risk from Europe, which is a big statement. But so this is kind of how little, in a way, sorry to say, they care about our mantra that we want to de-risk, or the EU Commission's mantra, because that's not necessarily German government's mantra either. Yeah. So number one. Number two is you're a successful new company. Yeah. And maybe you tried, Stellantis tried in China, but Stellantis was late compared to many German automakers. Maybe then you don't take it. You say, wait a minute, you promised me a joint venture, you're not going along, I'm leaving. Why? Because you don't have a stock of investment. And therefore, maybe the wind blows in a way that it's not going to penalize you too much not being there, but it's going to penalize those who've been there for 20 years. I mean, that's why it is very different across companies. The third is this, let's call them small and medium enterprises. Maybe, companies that maybe they are family owned, they feel they need to be in China, huge market. They face humongous constraints today, which they may not have faced 20 years ago, because now they have the anti-espionage law. They need to go to who knows what legal, endeavor in China, any legal firm and a law firm there, and just the idea of anti-espionage law for small companies, like, wait a minute. So there's, to me, investment in China is mostly about the big companies that really know China well. And I don't think those are going to ever leave because they're too exposed. But I do see a retrenchment of new companies, especially smaller companies, because it becomes just very difficult. So that's a little bit where we stand. And Hong Kong used to be an entry point. You look at the statistics, the number of regional branches in Hong Kong has gone down. So people don't go through Hong Kong anymore, because what's the benefit? There used to be a big benefit. There isn't a big benefit anymore. So some regional companies either go to Shanghai or even Beijing, for that matter, or Singapore. Hong Kong is losing a lot of this, dynamism of kind of being the center of foreign investors for Asia. I think, and the other reason this brings me to India is that because foreign investment in China is plummeting. I mean, I'm saying Germany isn't, but the world as a whole is. Why be in Hong Kong? I may as well go to Singapore, because maybe India is my next market. Yeah, so Singapore is attracting a lot of these regional offices of foreign companies, and I doubt Hong Kong is going to recover that, because out of the three types of companies I mentioned, two types feel China is not as appealing. So that's not going to change, I feel, anytime soon, because the market is not as open as companies may be told. And when they discover it isn't, they may change their mind unless they have a big investment in the mainland already. Yeah.
What about Chinese SOEs coming to Hong Kong? Chinese money? Yeah.
So there you go. If you look at where the RMB is today, is I would say flirting with 7.3. I mean, this is weak. And the weakness of the RMB needs to be understood as money leaving the mainland. That's what it is, because the trade surplus is record high. So, there's a lot of dollars coming into the mainland, yeah, because of exports of solar panels, electric vehicles, you name it. Where are these dollars going? We don't see an increase in reserves, they're leaving. This is outright capital flight. Where is it going? Hong Kong. How? Through the state-owned enterprises, through, mass affluent trying to open, because it's very hard, increasingly hard. Insurance policies in Hong Kong, this dripping of money is a problem. Well, we saw this big time in Singapore. We had a big, massive case of money laundering. This was for me, China closing the door to money leaving the mainland towards Singapore. And of course, it's even easier in Hong Kong. Yeah. So Hong Kong is suffering because there's no money coming into Hong Kong from the mainland. And that's another reason why Hong Kong is suffering. So Hong Kong is squeezed. Because on the one hand, you have fewer investors going through Hong Kong to the mainland, and fewer Chinese money coming into Hong Kong. So that is the feeling you get when you're in Hong Kong, that there's no dynamism as there used to be. So it's not only we could talk about politics, but I think it's a very economic reality that is harming Hong Kong.
What about the banking industry? Still in Hong Kong, right?
So the banking industry, the wealth management is suffering from the fact that mainlanders have a hard time opening accounts, suffering from the fact that foreigners prefer an account in Singapore because they worry a little bit about who is in charge here. Then the corporate sector, this is very interesting. Well, first of all, the real estate sector is 14% down housing in Hong Kong. So demand for mortgages, you name it, is much lower. And why is the real estate sector down? Because China's real estate sector is down. And, in a way, it's very hard to disentangle. On top of that, rates are very high in Hong Kong because they have a currency with a dollar. So nothing really helps that real estate sector. By the way, 400,000 people out of 7 million have left Hong Kong. So, who is going to buy all of these apartments? So and then finally, and this is very important, Chinese SOEs used to borrow from Hong Kong, big time. When Chinese interest rates were higher than US interest rates, it's over. Nobody's borrowing in dollars because why would you? So there's many reasons. I didn't even mention the word national security law because I don't need to, because all of these are economic reasons and they're very important. I'm not saying there's nothing else happening, but what I'm trying to convey here is that there's many economic reasons why Hong Kong is in a weak position today.
Just going back to what you said earlier about economic tariffs on electric vehicles and things like that. You were saying like it's probably not enough or it's too low. Now the US style is I'm imposing 100% tariff without doing any investigation on anything, which is a very political kind of political statement. The European way is more like, all right, I'm going to do an investigation and we're going to go case by case, and we end up with this 20% to 38%, which most economists are saying is, as specified, is not enough. But what message does it send to China? Does it send a message that we are weak and we are prepared to negotiate, or on the contrary, does it mean we are open to business and we still believe in the Chinese market? And as well as China as a manufacturing place, we're not, as you said, we're not there. We're not ready to shift to another country, but possibly India or others.
Well, to answer that question, I was actually in Bologna with a transatlantic conference that just came back, and this was Chatham House, I won't say whom, but high representative of the European Commission having taken this decision. So my question was, I can only judge if you tell me why you did this. Yeah, because eventually, if the objective was to stop imports, I'm sorry, it's too low. That if the objective was to make a point or maybe to gain some time while we get ready, I'm not sure what it means to get ready. Well, maybe it's okay, but again, ready for what? It's like taking an aspirin for the pain that's going to come later. I don't quite understand what's the objective. If the objective was we still want the Chinese market, then don't do anything, because China is going to retaliate anyway, especially if China feels you're not ready to do a lot, because that means you're weak. They didn't retaliate against the US, they're already retaliating against us. It is true that it's much easier to retaliate against us.
There was a Chinese car in the US anyway.
Yeah, so
that
it doesn't really matter. It's just a political signal, indeed. But for us, I think China will have it easier to retaliate, not because there are cars already. That's actually in our favor, because in the sense that there's something to cut. The point is that China can retaliate because we still think that market is important for us. The US has given up on that market. That's the difference. And retaliation can be very simple. Pork in Spain, cognac. It doesn't have to be the end of the world, but if there is a lobby or a business group that feels this is really painful, then I think, because let's face it, we need to go to the council here, and basically qualified majority is needed, which is a lot, but still, to stop this. So if China manages to convince XYZ, Germany, XYZ, yeah, I don't.
Hungary.
I mean, this could be stopped, and that would put us in a very weak place, which to me we shouldn't have even started, because what's the gain? So I understand that we may say, oh, we were so smart, we calculated the subsidies. Well, I've worked on industrial policy subsidy data in China for years. It's impossible to calculate the subsidies because most of the ways in which China supports companies are not measurable. So I frankly, and I'm sorry for the commission, I'm sorry to say this, I just can't believe that they can calculate it. But they rely on the companies rendering data. So, if you are, if you don't send any data, the max is the estimated subsidy, which is 38.5. How do you estimate that? How do you know? Because
apparently they've done a huge report, which I haven't read, but which is very detailed on each case.
Yes, it is. But my point is the definition of subsidy is very standard. And China has many ways in which it's subsidy. I know they've included many things, even land, receiving land at lower prices than market. No, they've done a great job. But even so, I think it's very hard to estimate. Very, very hard. I would even argue that even Chinese companies don't know how many subsidies their neighbors receive, because it's not subsidies, it's state-guided funds, lower rate on loans, the tax-effective ratio is lower, and nobody really has that information. So for me, yes, we look very professional, it's good, but the point is, can we do it?
If you are Europe, you don't want to align yourself with the US, especially a few months before the US election, which might bring back to power Donald Trump, and who knows who else. Then the Europeans have to go their own way, and their own way is a group of 27 nations that have consensus, or at least on this. But it's also, as we know, China is so good at dividing and moving. That's what China has been doing. So this is the European way, and also, I was just referring to Viktor Orban of Hungary, and the problems that we have, for example, politically in this country, and the problems that they have in Germany. So China knows how to play the game. So I think the Commission they are sort of setting some rules, because that's what they are there for. Quite different from the US style, which is more like I'm making a political statement and I'm imposing 100%.
But I'm sorry to say, China makes political statements every day. It's retaliating as we speak. So are we really sure? I hear you. I'm European. I understand that, using force, a political force to impose actions is not the way we operate, let alone with political. I hear you. But at the end of the day, we are confronted by two major economies which are doing that. So, at the end of the day, it's like, are we still going to go soft while nobody else does and rely on the WTO when nobody else does? Yes, it is beautiful. It's like these palaces, everything is very beautiful, but the point is nobody else does it. So for me as a European, I feel like, okay, it's like being on a boat that is, kind of sinking because nobody else likes that type of boat. They're in different boats. I may love it, but it's not only my decision, and that's why I sometimes feel that we need to, in a way, to realize that we're not setting the type of behavior that we would like to see in the world. We are accepting, we're takers now. And that's why I'm not sure we can continue with this kind of attitude where, yes, I measure everything, I'm very professional. Look at the US, it's because we neither have time, nor what we do is recognize China is retaliating against us and not against the US. I know they can, but not because we've been softer, we've received any prize or any benefit. That's my point. Yeah.
Question before we turn to everyone. The question on India.
Yeah.
You said a lot of people are shifting to India. The Indian economy is still much smaller than China's, and I mean, India would very much like to play this role, to welcome international investors. They've been courting international investors. What do you say to private investors or companies? I mean, in terms of, India's infrastructures are very much behind, and it's certainly not going to replace China anytime soon, right?
Well, I have a strong view here, so I hope. So basically, my view is the following: so the Indian economy is 1/5 that of China.
Right.
Fine. The income per capita after big efforts from Modi is only $2,500. China is 12,000, nearly 13,000. So of course, these are two different animals. Okay. But if I'm asked where growth is going to be, I would certainly respond in India, not in China. So it depends on what you look for. If you're in luxury, imagine luxury, and you want a big Japan, because then China is fine. But for many other things, China is no longer fine. If I'm an infrastructure company, China is certainly not fine. They have too much infrastructure. So it depends on what you're looking for. India is a big enough country for any European company I can think of. The idea that India is not big is like, it is big. Maybe the market is not open enough, but I agree.
Protectionism,
exactly. But the issue is not so much, it's not big enough. Even 1/5 of China is, I mean, companies don't even have banking sector, yeah? China supposedly has opened up to full ownership. If you're a foreign bank, you can own a bank in China. What's the share of foreign companies, banking assets in China? Less than 1%, and actually goes down, not up. So, yes, the country is big, but what's our role? Minimal in every sector. So an India that opens up could be bigger for us than a China that doesn't. On top of the fact that India's growth potential, even if they do very little, is around 6%. And that's not only India, it could be Indonesia, it could be the Philippines. Why? Because it's a very simple reason. Their urbanization ratio is very low. They need to basically move people to the cities, which is what China has been doing for ages. So it's easy growth. You don't need to be, the master of the universe to grow 6%. You're India. Even if they were to grow 5%, our estimates of China's growth rate go all the way to 2.3 by 2035. Is what, 11 years to go? So it's not 2.3. And no, and this is NDRC. It's not even. So the Chinese academics would tell you, yes, about that. Because the engines of growth are vanishing.
India is about 6% now.
6%. Right? By 2030, I think it'll be around 6% average. So the gap. So, well, I mean, if India doesn't mess it up, which could happen, I think India could have China's size in 2050. And why 2050? Because, well, it's a long story, but China will start growing less after 2035. Main reason is urbanization will be completed. 80% of the population in India will be in China will be in the cities. So growth will be very low after that, because the labor force, now people think China is not growing because of aging. This is not true. This is the article mentioned, China Leadership Monitor.
Yes, very good.
It's very obvious that China still grows positively out of people moving from the rural areas to the cities. So China is not growing less because of that. China will grow less because of that by 2035. And that growth, our estimate is 1%. So think about it. 2035, 1% versus 5, that's 4 percentage points of growth. India will converge very rapidly. And by 2040, China will have lost 100, and this is basically, you don't need to, I mean, this is physics because you cannot change your demographics in a day. 152 million people. No, sorry, 120. India will increase 152. That's massive. So this is why, I mean, we like it or not, India will be a growth country, a growth economy. China will be a mature economy. I don't mean to say it won't be good, but it will be good for certain sectors, not for every sector. Yeah.
One final one before I finally turn to the room. Taiwan. You spent a lot of time in Taiwan. People are making, how do you say that? Game scenarios on how much it would cost. We all take part in these kind of games. You know, if there was a war, if there was a blockade, different scenarios. I'm sure that's your bread and butter every day. What do you make of it?
Yes.
And first of all, I mean, what is the actual risk? And secondly, how much would it cost? And thirdly, how would it affect Europe?
So yes, indeed, I could spend my day, but I prefer not to, because I actually think that this discussion about Taiwan's invasion is a scary one, but not the most likely, in my view. The most likely is actually what's happening in Taiwan now. That's what I would be reading. It's very scary what's happening in Taiwan now, which is that you have a semi-presidential system by which you have the DPP, third term presidency, and all looks very fine. But the DPP doesn't control the legislative yuan, they call it parliament. And that parliament it's not fully controlled by the KMT, but there's a third party that is now, and this is very interesting, supporting the KMT to change legislation to reduce the power of the president. That's where we are now. This is much more clever than an invasion and much cheaper. And this is Hong Kong. This is Hong Kong. Of course, Taiwan is a democracy. It's much harder to do this. Li Tang created a lot of, like protection mechanisms when he became president of Taiwan, tried to basically isolate Taiwan through referenda. So it's not easy to take over. But I actually think China is going to try very hard this route, because this is much, I mean, what can the US do? Very little. So, I think we need to look at kind of carving out the democratic, I would say, functioning of Taiwan, rather than a blockade or an invasion, because that has proven to be difficult. I think Ukraine still shows how difficult it may be to China and how risky it may be. And I think China is looking for other, there's a lot of other ways, from infiltration to fake news to blah, blah, blah. And I don't think the US can stop that. So
Taiwan has been quite successful in rallying friends, new friends in Europe, different parts of the world. I mean, they're losing formal allies, but they are gaining different types of support. But that works enough.
Yes, but those allies will be there maybe if there is a huge invasion with but will they be there if power is carved out? How can we respond to that? So, yeah.
Okay, questions? Please raise your hand. If you can just identify yourself, that'd be great. Yes, sir.
Advising SMEs to go.
Okay, hold on, please.
Oh, sorry. You need to speak in front of the microphone. And you can ask questions in French if you're more comfortable. But we can start in English, that's fine.
Thank you again. Jean-Don also advising French SMEs to still grow in China and in Asia. And one big question is on Indonesia. According to you, what are the existing value chain and the potential ones coming up?
Yeah. So Indonesia is, of course, a massive opportunity, size-wise, also market-wise. I mean, I'm not sure it is such an opportunity in terms of China plus one production to re-export. I think that's a different ballgame. If you look at the countries that have received the most FDI for China plus one from the Chinese side, this is Thailand, Mexico, Vietnam. I'm missing the fourth, but it's not Indonesia. Indonesia is receiving basically investment into commodities. I mean, it's not really Malaysia, I forgot. Malaysia is the fourth. So, but it's not like a platform, a supply chain type of platform yet. But the market is, of course, very important. Now, I think Prabodo's first kind of I would say attitude, after winning the elections was, to me, slightly closer to China than Jokovic. I have the feeling, but first he went to Beijing even before being a president. So, it's like very, very telling. So I have the impression that Indonesia might be harder to engage in a China plus one from the West side than, say, the Philippines or, the Philippines is the most obvious case within Southeast Asia plus India. But Indonesia, I think we would need to work much more with Europeans, make it easier. As you know, we failed in our negotiations because of deforestation, among many reasons. But I think we need to realize that Indonesia is a large country and be more willing in a way to negotiate. But I also think that Prabodo's history is one in which he might feel more comfortable with the global South type approach to the world than Jokovic. I think Jokovic was really, in the middle, trying hard to play that double theme, but I think Prabodo will be harder for us. Yeah.
And in the case of the Philippines, I mean, we have Marcos, but
yes.
Who will be next? They keep switching from a more populist side to a kind of pro-West. I mean,
that's true, but when one looks at every survey you can find on, the image of the US and China, so this is a Singaporean-based survey, image of US and China in Southeast Asia. The country with the worst image of China, best image of the US is the Philippines. So what I'm trying to say here is that there is indeed beyond beyond Marcos or Duterte, or you name it, I think there is a growing discontent. And that is related to, of course, as you all know, gaming in the Philippines from China. I mean, the Philippines hasn't really benefited too much. It's been more like online services, and that hasn't helped the average Filipino. So the image of China is really, really negative. It's very different, I think, from Indonesia, from other countries in Southeast Asia. Yeah.
What's next? Yes.
Thank you so much, Giacomo Moroni from MyTNSC, so one of the companies and sectors that have been looking into the discussions, becoming an expert on electric vehicles. So this might be recently called it, so it's quite interesting. But if I may pick your brain in relation to what you think is going to happen over the next months in Europe. So of course we've seen the investigation on pork meat that was launched this morning from the Chinese authorities, making a little bit of scenario planning. Of course, there is one way now that is experimentation in Europe. The next 3-4 months, you think that some countries in Europe are going actually to concede to China and use the electric vehicles tariffs. So I don't know, what's your view of that as well?
I think we are, unfortunately, we're going to be under a lot of pressure because China's already seen the cracks. I mean, when this thing was announced, we already read in the news, Germany doesn't like it, Sweden doesn't like it. It's like, I mean, really, do we need to say this now? I feel like, my God, I mean, we weaken ourselves so dramatically just by showing our differences. I know this is where democracies, people can say what they like. I understand that, but, we also need to realize who we have in front of us, or what type of economy, what type of political system. And I sometimes feel that just we're too upfront on our differences. And I think China knows, in fact, why pork, because again, Spain in the news was with France in terms of those who would actually support the Commission at the Council. And I think they're going for those, So I was expecting this, actually. And Spain, the other thing is that, as you probably know, Spain received a Cherry's investment in the old Nissan plant. And I just got a call and I said, where do you think they're going to live? They love it. They're receiving subsidies. They have a ready-made plant. They can't export if we impose countervailing duties, at least for the time being. So why would they lift that investment? They're not going to do it, but the government fears they will do it. So they create this fear, and then how many countries will give up? Maybe enough for a qualified majority. If Europe can't stand behind the European Commission on this one, we already saw solar panels in 2014. I just want to recall the audience. I was working as an advisor to Karel de Gucht. For me, it was embarrassing because it's like China showed its full power. Yeah, if you recall, Xi Jinping went to Germany. I mean, everybody knows what happened. Again, are we going to do this? Then let's not start the investigation. Let's not even start because we look so weak. And this is power struggle. This is not economics. This is power struggle. So we need to realize that looking weak is not good. So yes, I worry.
It's about building consensus, and we can't really switch ourselves into the United States.
It's over. I hear you, but I'm sorry to be very blunt. We're in a different world.
Sure.
So we can build consensus. We don't need to tell everybody we're building consensus. And by the way, I thought we had already built it. Yeah, I thought we had already built this consensus. I thought, has our council ever talked about this investigation? I'm sure it has. But, we need to wait for China to show its muscle so that we change our view. That's not consensus. It's very stupid. I'm sorry to say, but, you build consensus before and you don't even start. That's fine with me. But if you start, you need to stand behind your decision. This is trade policy.
Everything was written in advance.
In advance?
Yeah, I mean, the investigations, everything was more or less, it was easy to plan by China, I guess, to
maybe
the outcome.
Maybe, I don't know. Maybe you're right.
Pierre Asseo had a question, I think.
Well, I'm Pierre from Asia Society. Just a difficult one. Imagine you're a global asset allocator and you don't invest in Asia yet.
Yes.
Where would you go? And how would you split your investment in equity markets?
Yes. Well, I wouldn't mind taking some China bit because it's so cheap. Yeah. I mean, Chinese banks are at 30% book value. So maybe you get it wrong, but the point is, sorry?
Like Société Générale.
Well, that's true. Okay, I leave it there. Yes, but he said he needs to invest in Asia. So, yeah. So anyway, I may take at these prices some China risk a little bit. Why not? It's a big country. I mean, you can get it wrong, but the RMB is cheap. So, I'm not saying you don't need to invest in China. Don't take me wrong. But what I'm saying is, if you invested in 2005, you didn't earn a penny. Or a euro. You see it? Yeah, that's all I'm saying. I mean, China has multiplied its GDP size by 7.8. I made this calculation. I was terrified. And if you had bought a stock in 2005 in RMB, you're flat. It's quite something, this thing, huh? It's like unbelievable. So yes, I would say go for it because, it's unlikely that for the next 20 years you make no money again. And if that happens, then I'm sorry, but China is over because it's impossible, nearly. So maybe China this time won't multiply its GDP by 8 or 7.8, but its market will do a little bit better. So I would be very careful with the sectors, because I think some sectors will need full reshuffling. The losses are accumulating. We know that very well. There is 70% of Chinese companies, according to this is financial statements, this is really, you can calculate it yourself, are loss-making institutions. So, you may choose your bets carefully, but I'm sure there will be companies which will do well globally. So that's one. But India will enter the MSCI, as you know. I mean, I know it's very expensive now, but I think a country of that size that enters the index sounds like would go well. Maybe you wait until the 100 years of honeymoon of the new coalition, because they may not get along, and maybe later, you move on at a cheaper price would happen. But I think long term it kind of makes sense, because it's not even in the, it's a huge economy, not even in the index. So yeah, so that it would be my second choice. And I think Asia in generally should be, it's half of the global economy. So how can you not have anything? I mean, that the question I would ask you is, my God, I mean, you're really late, because this is half of the global economy. But that doesn't mean China only. I would be very careful with having only China, because it's a hedge. If you buy India, you're hedging China in a way. So that's why I think it's a very interesting combination. Yeah.
You had more? No?
Yes.
Okay.
I'm an advisor. I'm German in Paris, so I'll go. The one elephant in the room we haven't talked about is Ukraine. And I think for Germans whose post-war success depended on three pillars: security done by Americans, cheap energy from the Russians, and markets in China, obviously two, maybe even three of those are not really exactly working anymore. What's your view on how China, and one could see it when Xi Jinping was here, Macron even tried to get Ursula von der Leyen to have a bit more coercive power in the room, but the Germans had been there 2 weeks before. What's your view how the Ukraine issue, where China supports clearly Russia, how's that going to play out as part of this European-China relation over time?
Thank you. Okay, so again, in this Chatham House meeting, we discussed a lot about Ukraine. There was a Chinese representative I won't get into, but it's tough, yeah? I mean, it's really tough, because here we're only talking economics. We're basically realizing that we could deindustrialize, and maybe it's even happening already. And this is partially because China is very competitive. That's fine, let's grant it. But also because of huge industrial policy, yeah? And there's estimates of the amount of funds, and again, we don't really know, but this is massive. So the question is, on the economic side, what do we do? But on top of that, you have political issues, Ukraine, what is at stake for Europe? So it is pretty intense, yeah? This relation with China, I think Ukraine has been kind of the last drop on. But as you rightly point out, for some governments in Europe, I'm sorry to say, it doesn't seem to be the last drop. For me, it's like quite unbelievable, because it is harming Europe massively. Yeah, I mean, let's imagine Russia would not have been supported. I actually think support by China and India is different, because India is benefiting from Russia in terms of cheap oil prices, but China is exporting, let's face it, I think everybody knows it, dual technology, drones, semiconductors. It's not the same. I mean, one thing is to benefit from a weak situation, and the other one is to feed the world. I'm sorry, but it's not the same. So, we would have, as Europeans, to be very aware and I mean, we always use our values, or I mean, like this is a very value-based issue here, yeah. And we don't seem to go beyond. We also say we're pushed by the Americans on this. We shouldn't be pushed by the Americans. We should be seeing this ourselves, because this is at the heart of Europe, and it's a much bigger problem for us than for America, in my view. So, you know, I feel we're very complacent. And we're complacent because it's a big market. You said it, the third pillar. The third pillar trumps the first pillar. In China, the security trumps economics. In our case, economics trumps security. Yeah, we're not seeing the risk because the market is so big. But for how long? Imports are falling in China. We know that, especially our exports, Western exports. So how long will that market be big? Let me give you just one number, and you know that surely very well. This is the case of Germany, and this is since 2002, I believe, maybe 2001, but no, 2002. 2002, Germany's largest trading partner on the import side is China. On the export side is the US. Yes, this is Germany. Now, guess what's happening in Asia? Taiwan's largest export market is the US. It's no longer China. It used to be 40+%. South Korea, US. Japan, US. And the most striking thing I've heard in the last few days is ASEAN's largest export market is no longer China, it's the US. Who is selling to China? It's like, I mean, and the reality is China is, and maybe rightly so, because they have the technology.
Self-reliance.
So they are basically substituting imports because they can. By the way, India too. Maybe they can't. So, you know, I agree with you that there is a risk in India because they are just too protectionist at a time where they can't be.
And overconfident.
Overconfident. I totally agree with that. But the point is, the market we are kind of dreaming about vanishing. So, you know, so do I need to take this Ukraine thing so lightly if the market that I've been offered is much smaller? I mean, the trade-off is no longer as clear. And I think this is something we need to think through.
Who's next? The two ladies behind. Thanks.
Hi, thank you. It's very interesting. My name is Itziri. I work at CNFS. My question's a bit different. It's about labor migration. And so I was wondering if you've noticed any different or emerging trends in both low-skilled and high-skilled labor migration between Asian countries and out of Asian countries, and what type of impact that will have.
Well, that's a big question. I probably don't know as much as you surely do about this topic. So what I'm going to say is it's not, I would say, very well researched, because I don't do research on migration. But, you know, what I can see is that migration is going to be a big problem in Asia, more generally. I really feel that Asia is not realizing, really, the extent of the problem. If you look at South Korea, it's dramatic, really dramatic. And they're not really getting it. You see, so you probably saw Japan's quest for talent with such a weak yen. It's like they're going backward in terms of the amount of people they actually attract. So big problem for Japan. China is not even trying, to be frank. So, you know, these big economies, even Taiwan, I live literally in Taiwan, but I work in Hong Kong. It's complicated, but I feel like Taiwan is like the second lowest fertility rate in Asia after South Korea. I can't see any measure that. So I think it's going to be a big problem, because then you add, of course, climate change, and there's going to be forced migration. I mean, like, you're not going to be able to stop it, but they are not ready. So I feel that it's going to be a big problem for Asia, and that's all I can add.
And for us too, by the way.
Yes, but we know about it. The problem I feel in living in Taiwan is that they don't know these people are going to come, and they don't even know whether they need them. I mean, the degree of unpreparedness. I mean, we are unprepared, but we kind of know this is going to happen, blah, blah, blah. We have some migration policy. In Taiwan, I can tell you the three candidates going to the elections in January, nobody had a migration policy, a single. And for a country of that, with that situation, it's kind of mind-boggling that they're not thinking about it. So in a way, yes, we have a big problem, but I think they have without realizing they do.
Feels like in Asia, people are used to populations moving around, the Chinese diaspora, going to places, to Southeast Asia and so on, that it's always sort of looked after itself. It feels like it, but the demographics is a serious problem, which is affecting many of these economies, including the so-called four dragons and Taiwan, Hong Kong as well, South Korea and
Singapore.
But Singapore has a lot of immigration.
Singapore has, I would say, the only country with the real, talent attraction program that is, because Hong Kong has a new program and is very, and I hope that helps, because this is too, of topic we can discuss later if you want. Yeah.
I think the lady next.
Hi, my name is Kathy. Thank you so much for your insights. You spoke about money leaving China and that impacting the RMB. Could you speak more? What are the key drivers of the money leaving? And do you think there's any way for that to be reversed or changed?
Yeah. Well, the most similar situation, actually, worst situation was 2015, if you recall. So what are the similarities? In 2015, you had deflation in China. We do have deflation. So there was a big correction in the stock market. In a way, there has been, maybe not so rapid, but if you look at what has happened in the last few years, nobody would have imagined that the stock market would have really gone to the levels where today after opening up from zero COVID. Everybody was expecting a boom. So in that regard, I think it's not too different from 2015, but we don't see it now because there's a big trade surplus, which wasn't there in 2015. Actually, the trade was a trade deficit for the first time. China has hardly ever had a trade deficit, but in 2015, second half, it did have a trade deficit. So all of the money leaving would impinge on the reserves. So you would see, wow, China is losing 1 trillion in reserves. Because now you don't see it because they have a big trade surplus. So why is the money leaving? Because there's no confidence. And therefore, you see it in the numbers. Investment is very low. It's growing 4%, it's well below the expected growth rate. Consumption is barely, today the numbers were out 3% for an economy that grows 5%, consumption 3%. It's like, how are you going to grow out of exports? Exports are not a solution to an economy of that size. So people are very worried about the future, the future of the Chinese economy. And they prefer, and partially it's because they're doing the China plus one. So if you're a big company, you're investing greenfield investment in, say, Malaysia, or so you yourself, let's call it good money. You're bringing money out, but it's money out, and no money is coming in because foreign investors are not investing in the mainland. Inward FDI is plummeting. So all of this makes this whole. Part of that is lack of confidence, unrecorded money leaving, but part of that is just that the companies know the returns in China are low, so they go elsewhere. They go to Mexico, they go to Vietnam. Yeah.
Gentleman there.
Hi, Olivier Chéreau from Norman K. You were just referring to Vietnam. I have a client who estimates that Vietnam can be the next factory for the West.
Yeah.
Do you believe in that?
So far, I feel Vietnam is going to be the next factory for China. That's the way I feel it. So that's huge amount of investment. I was in Vietnam a year and a half ago, and I went back, but that year and a half ago was December 2022, was very important because China was opening up from COVID. And we had this change in regime in Vietnam right after I was there. So I was expecting a much tougher Vietnam on China. I was expecting. Now I don't expect anymore, but at that time I was expecting, and I didn't see that at all. So there's a lot of skirmish, like entering the border in Vietnam, Chinese entry, but you don't hear about it. It's not like India. India is, how would I say? India's vision is that India is center of the global south, that China is there to mesmerize India, that undermine India. I mean, they have this strong feeling about China. Vietnam is in between. It's like clearly playing this double game. So I think for the West, it will be hard because there will be so much, and already the case, Chinese value added being just assembled in Vietnam. So once the US really gets serious, and this is going to happen first with Mexico, but because of the renewal of USMCA, they're going to start saying rules of origin, rules of origin, rules of origin everywhere. And I think Vietnam will be hit because there won't be enough domestic content. So I would say, and also Vietnam is too small, it's overheated. There's too many companies there. It's just, it doesn't have the economies of scale, in my view, needed for two major superpowers to produce in, because there's China and there's us. So.
And the infrastructures are still lagging behind.
Lagging. They have huge capital controls. You need to operate with a company in Singapore. Yeah, I'm sure you know. If you are, like the dong is the most non-convertible currency I can think of, even worse than the RMB by far. So it's not what I don't know. I think it's overrated, if you ask me, as a Westerner. Maybe not for China, but I think Vietnam is just too much. I mean, too much money having gone there, and too many bottlenecks, and in two systems. So you really can't, as a Westerner, say, okay, I'm safe here. Nobody's going to touch my investment. No, rules of origin, you're done.
And you find the politicization of Vietnam, like a little bit like China, the weight of the Communist Party,
in my opinion.
Recently had some crises.
Exactly.
This is affecting the business, would you say?
Yes, because everybody thinks that terms are going to be lifted, that Vietnam is going to follow the kind of Xi Jinping model of a longer.
But they keep changing leaders, though. Like in China.
Well, they are firing leaders, but that doesn't mean that some are not staying.
Right. Yeah. That's right. Yeah. Guillaume, you had a question from Les Echos.
Hello, I'm Guillaume de Calignon. I'm a journalist for Les Echos Financial Daily in Paris. I've been very surprised. I was very surprised this year by some decisions by some very big emerging markets governments concerning their relations with China. For example, Brazil opened an inquiry on Chinese steel makers. I think it was in January, and some other governments, I think Vietnam and maybe Indonesia, don't remember exactly, but 10 days ago, we learned that the Turkish government will raise their tariffs on Chinese vehicles, cars. Yeah. And I think it's not only electric vehicles, I think it's all vehicles. So do you expect, can we expect the clash between emerging markets and China? Yeah. Because some countries might be very afraid of the world factor, I would say. And is it a problem? To which extent it is a problem for Chinese exports and Chinese business model? Thank you.
A great question. So basically, these are a couple of numbers to support my point, which is yes, I think we're going to see a clash with big countries, in my view. So these are the numbers. China's share of global manufacturing exports is 21%. Its size is 17, so it's already punching above its weight. But intermediate goods, it's a third. So this country exports a third of intermediate goods globally. Wow, if I'm Brazil, I'm like, I'm going to deindustrialize. Yeah? I'm never going to be able to produce steel, no matter how cheap I could be able to produce it. I have iron ore, but I can't because prices are, at the bottom. And why? Because there's overcapacity from China. So, at some point, I think these countries are going to say, but wait a minute, I thought China would, in a way, help me industrialize. And I'm not saying that China does this on purpose. Of course not. China would be very keen to help Brazil, but the problem is that China desperately needs to export for the reasons I mentioned, yeah? So in a way, it's like there's no other option for China. The real estate is in shambles. Investment in infrastructure is really very stagnant, below 4%. Why? Because local governments don't have any funds anymore to be able to finance this infrastructure, given that their largest source of revenue was selling land to the real estate developers. So, the whole thing is, so because they don't have any other room, Brazil, I'm sorry, but, and then Brazil is like, but wait a minute, I thought we had a different deal. Yeah. And I think this is, unless you are a proxy China, let's say you are AMLO, yeah, like Morena's party in Mexico. Why not? I'm a proxy of China for the US. Well, let's see if the US accepts that. But put it this way, because I'm taking Chinese imports to re-export them. I should be fine. The reality is not even Mexico is fine. They have, believe it or not, 94 billion, nearly 100 billion in bilateral deficit with China, trade deficit. So they are actually swallowing these imports. And for how long? So, for me, either unless China really opens up its market and these countries manage to sell to China, at some point this is going to crack. Because they will say, wait a minute, I want to produce something. And China's green greenfield investment, so say batteries into Morocco, batteries into Hungary, is very targeted to the European market, let's face it. And also, it's not creating so many jobs. It's not creating the jobs that these countries are expecting to see. So, because a lot is literally assembling, because most of the inputs are imported from China. So at some point they're going to say, but wait a minute, I thought this was something different. And therefore, I think China has to be very careful because it's banking on the global South, and it has the right narrative, and and the West is the colonizer, and the BRICS, and but these countries want jobs. They are piling up debt, as we all know with China, some of them massively. So, at some point there's going to be, the moment of reckon. Did I gain? What did I? So, sharing more of that surplus will be very important for China, but China might not be ready to do that. Yeah.
Shall we take a couple more and we'll leave it there? Yes, the gentleman here and you, yeah.
My name is John Krieger. I'm a researcher. I just studied history of American export controls. A question about Biden's policies recently, 2 years ago. One of the things he did was ask the Department of Treasury through Chief Economist to restrict foreign investment into China. Total new policy.
Yeah, outbound.
How effective has that been? Do you know?
Yes.
China done?
Yes. So it's a very new measure. So I think this is very interesting for Europe because, as you may know, the European economic strategy, European economic security strategy actually mentioned, although just en passant, not with detail, that we might also do outbound investment screening. So it's very important to know whether this is happening, to what extent. My sense is that it is very related to the three sectors that the small yard, high fence strategy has identified: AI, quantum, and semiconductors, but not a general outbound investment screening. Therefore, I think it's too early because these are emerging sectors. We know that, say, any company, major US company, I don't know, NVIDIA, if they dare say, I'm going to set up a company in China to produce GPUs, it's going to be no. I mean, we know that, but have they asked, and has that mechanism really worked? My sense is no. I think what may come, though, to your question is on CFIUS, because this is dealt with by CFIUS, you may know better than me, is that CFIUS, this is true for Europe, our investment screening excludes so far greenfield. So in other words, if Spain receives an offer for a plant, Spain will take the decision, no need to go to the committee. In the US, greenfield is in principle excluded from CFIUS. Then this is going to change. Because data protection, I mean, data security. So greenfield might be seen as also a national security threat. Yeah, IoT, electric vehicles, all of this. So I think we're going to become stricter also on the greenfield investment, we like it or not. Our governments may love the idea of creating jobs, but it seems to me that there's going to be a lot of, and the outbound, I think if you are in this key emerging technology, don't even try, because it's going to be hell, yeah, for you to deal with this. Yeah.
But if you're China, you tell the government, I'm going to create, I'm going to invest in greenfield factory. I'm going to create jobs.
Yeah.
And let me do it, because I'm willing to help your economy. And I mean, you may say it's not enough jobs creations, but it's better than M&A or some Belt and Road project that have not really led to much result.
It's better, but I'm just saying that especially the US is looking at this very carefully, because we had CATL with Ford, a joint venture, and it didn't go anywhere. Both the US put limits and China on tech transfer by CATL in the US. So it's both sides, because at the end of the day, you don't want any tech transfer, and if you are the US, you don't want any supposedly national security risk, which might be overstated. I agree with you, but the thing is, this is happening already. So yes, security trumps economics, except in Europe. Economics trumps security so far. So we are on a different planet here. Yeah.
The
Good evening, Philippe Le Corre. Actually, when I listen to your presentation, as a European, I feel quite depressed.
Sorry.
Now, anything new? Naively, I thought, okay, we have managed to put some tariffs on electric vehicles, and now we totally ruined the day telling that it's basically worth nothing. So the question would be simply, what do we do? What do we do, and especially what kind of governments do we need in Europe?
Yeah.
As you know, we have an election coming in France, and of course the causes for the rise of the National Front, or the National Gathering, are multiple, but many people say it's due to the déclassement, the middle class being squeezed out, deindustrialization of French regions and small companies, etc. So yeah, at the end of the day, what do we do?
You feel the weight of responsibility on your shoulders.
So
yes,
going to give us all the answers that this country.
I mean, I can't, because I'm not even running, or I couldn't even run because I'm not a French passport holder. So I don't have any. I don't mind even throwing some ideas, because anyway they're not applicable in terms of anybody's campaign. But to me, what have we missed before? To me, we can't really blame China. China has used its cards in the best way possible. I may not like it as a European, but I just can't just say, wow, look, I think we need to look at ourselves and figure out what we need to do. Because there will always be a China, quote unquote, meaning could be anybody else. I mean, if you're not standing to your comparative advantage, if you're not doing your job, to put it very simply, anybody can come and that's the way the global economy works. So I would first say, let's focus on what we can do. And not everything should be defensive measures. I actually, frankly, think we need some defensive measures because we need to gain some time here. We're running out of time, and I do think we're de-industrializing. I mean, it's very easy to see that in the data. Sure.
Because also a question I have: why haven't we been able to impose on Chinese companies the same restrictions that they imposed on us 25 years ago? You wanted to go to China,
yes.
JV,
51%,
transfer, etc.
Yes.
Why haven't we been able, as Europeans, to do that?
To do that,
Because
we thought we were so good and so rich.
First of all, because we believe in God. God is the WTO. But which is fine. I like the WTO, but we cannot be the only ones believing in the WTO. It's like you go to church alone. I mean, that is not going to change the world. Yeah, I mean, so I mean, these things to me, I'm sorry to be so frank, but it's like it makes me upset that we kind of don't see nobody's at church. I mean, only you. But and that is I mean, I put it so bluntly because I think I want people to remember in a way that we are alone in doing many things now, which we think everybody's following. AI, of course, AI, the digital art, the AI, I mean, nobody's following. So we make the world pretty, but it's only our garden. So, it's very pretty, but you're on your own. And I think this is something we need to realize as Europeans, that we're no longer as large, as influential, to just impose on others things that might be beautiful, but nobody's following. So we are creating a negative comparative advantage on us because we still think people are going to follow us. And that's something we really need to change immediately. I mean, we're here in a situation of really, as I'm sorry to say, the elections in this country show. This is a question of emergency. It's not. So if we need to impose some countervailing duties to gain time, I'm sorry, it's not even the main thing to discuss here. It's a temporary. It's like there's a word in French. Esparadrap. So it's the only thing we're doing, and we keep on talking about the esparadrap. It's just esparadrap. For God's sake, let's talk about how we move in. Even the United Arab Emirates. I mean, look at the tiny size of that place. Is actually negotiating, as we speak, I think it's already signed, an alliance with the US on AI. Where are we on our alliance on AI? You know what I mean? Like, and big things. I mean, do we want to fall behind in the key emerging technologies? Do we need the US? Can we recognize we need the US? Because others do. They do recognize. I just finished a big study, 82 million patents. Okay, I didn't do it, but somebody, data scientists at Bruegel, went through that hell just to show, looking at the quality of the patents, where we stand against China and the US, and it's dramatic. So isn't that more important than electric vehicles? Of course it is more important than electric vehicles. We're looking at the past. Let's look. So do we want joint ventures? Let's do it. Say, we don't want China to dominate our markets. Let's focus on the new markets. Because, if you're focusing on the past, you're not going to be able to stop it with the sparadrap. So, I feel we lack the vision of what we need to do in the future. I know it's very difficult. We're many different economies. I mean, I could talk about why we don't need so many economies, but maybe don't get me started on that one. Because as a European, I have 4 kids, and I look at their passport. Is this passport going to be of any relevance? You know, I mean, I'm sorry. I prefer them to have a strong passport in the real sense of things, because we Europeans thought our passports, individual passports, were very powerful, but by now we realize not really. So there's many things to do, starting from forward-looking, and in my view, getting more integrated rather than more disintegrated. Yeah, which is where we are heading. So it is really not the way forward. Right. That's it. And I think
mind you, if you look at the United States, yes. I mean, it's the same, right? It's the populist wave,
yes,
it's the deindustrialization. I mean, we've been through that, and
yes.
we may go back to that, actually.
But the US has an advantage, I'm sorry to say, we don't have. They are a nation, okay? So they may have these elderly guys out there, but they're a nation. We're not even a nation. Our markets are very small.
Yeah.
So we need to realize, wow, I mean, we're not a nation. Maybe people don't want to be a nation, fine with me, but let's take the consequences of that. Consequences is we're very small. In a world of great power competition, if you are small, you're done. And okay, and if we don't mind being done technologically, then let's accept it. But we still play as if we can do it. And I think that's the problem. I mean, we need to either accept our destiny or change our destiny, but we cannot lie on our destiny. This is for me the unacceptable reality for our young people. I mean, for God's sake, let's tell them where we are. And that is something the US in a way doesn't have, because they are in a mess.
Yeah.
But they are a nation. They have reserve currency. They have a humongous market. They have technology. Sorry, I mean, and I know I'm not American, and I look, and yes, but we could have had Turkey, and we didn't. Yeah.
Oh, you mean enlarging to make it?
Maybe not enlarging, but offering Turkey. But now we have a free trade agreement on very few sectors with Turkey. That could have been our platform for many other sectors to produce much more stuff cheaper. Maybe we didn't need to, but frankly, we gave Turkey the bare minimum, and Turkey turned. So, yeah, frankly, I don't think we're strategic. I'm sorry, this in a country of strategic people, it's really sad to say this.
We thought that until last week, but actually.
Okay.
Last question. The lady there, and then we'll close. Yeah.
Hi, my name is Riku. I'm visiting Rajas, my friend here from Pakistan, wonderful being in Paris. My question is sort of, this has been incredibly informative, and sort of, I live in Pakistan, so I get a very different perspective usually, and although I do try and read and sort of follow how people in Europe, and I spend a lot of time in Europe, think, etc. But my question, coming from where I'm coming from, is, you mentioned the competition basically that China is posing to European economies and so on, and I completely understand what you're saying as a European, that complacency is something which is going to lead to irrelevance. But as an Asian, what I also see is aligning with America much more closely has in fact led to Europe impoverishing. In fact, as this gentleman mentioned, in terms of cheap energy supplies from Russia, frankly, that really did lead to German industry being so much more competitive. And one of the key reasons that Germany is deindustrializing is because it's pivoting away for geostrategic reasons. So Europe is, and one reads this a lot in the Western press about the threat from China that's being posed to the Western world, etc. But is it, I'm wondering if instead of thinking in terms of these silos, it's always this us versus against, us versus them sort of syndrome. What about a more collaborative approach where everyone
with China
is that possible?
Yes. Maybe because I feel like he was trying to ask a question. Can I answer the two? Because I feel he's the youngest person in the room.
So he's got the right to ask a forward-looking question.
Yes, indeed.
Forward-looking, maybe not so positive. I want to go back on a possible war scenario in the Taiwan Strait.
Okay.
And the possibility that this would lead to a banking crisis. in Hong Kong?
Banking crisis globally or in China? Or?
Starting in China.
Okay.
Why don't we answer the negative question first
Okay,
and the positive question in the end?
As I said, I don't think China will attack Taiwan anytime soon, unless for the reason I mentioned, I think they can do differently, much less costly, but unless the situation in China says the reverse order gets so bad and the banking situation, especially local governments, affecting the banking sector. So the financial crisis could push Xi Jinping to kind of, put aside the economy and focus on nationalism and, do kind of a wild thing to hide or to put aside the economic situation. So I feel it's the other way around, if you see what I mean. Like a big economic crisis could lead China to a war that China should not want, because it doesn't need it, because it can, in my opinion, get Taiwan with a little bit of, working it out differently, and it doesn't need to rush. But
I was thinking of, for example, scenario nationalizing parts of some Western banks that are in China and Hong Kong.
They don't need to do that. They're too small. It doesn't really matter. Western banks in Hong Kong used to have 60% of assets. Now they're like, don't worry, we're done. No, don't worry about that. But so only Taiwan has $1 trillion in Chinese banks, meaning Taiwan has probably more at stake than we. So no, don't worry about that. I mean, I'm saying that it's not too, I don't see that one as a main risk. But anyway, so why are we not more collaborative? I mean, when I left for China, this is 18 years ago, I can only tell you, had I seen myself now, I would say, are you crazy? Because I really love China. I mean, like people of the country, this is like an amazing civilization. So I didn't start this way, but the problem I've realized is that there is a disconnect between China, the nation, the people, and the party. I'm sorry, but this is increasingly obvious to me. And the thing is that I'm a European, so I have a history behind, and for me it's very scary. And I've lived in Hong Kong through the protests, so I have a little bit of an emotional. I put it this way: I have a little bit of an emotional part through which I've noticed that, and this is not only about us, it's about Chinese people, in my view, that this is really getting, quite something at the moment. And again, more for them than for us. So I feel that trying to negotiate what? So what's the negotiation? We don't want to be deindustrialized, but the point is China's survival depends on this. It's not a zero-sum game in my mind, but it's becoming a zero-sum game because China is not developing, other engines of growth. The obvious ones, the obvious one would be consumption. Still stuck at 32% of GDP. And I actually think China is not pushing consumption because it's ideological. Because I actually think that, if you read Xi Jinping's kind of mindset in detail, and we can do it very easily, we can even download the app if you're interested. It seems, when he talks about common prosperity, about our welfareism, our system, the European system, or that's not good for our society because we need tough people. We don't need to, we don't need lazy people. So frankly, it sounds like it's not the model to consume, because maybe consumption gives freedom. You see what I mean? Like people consume what they like. So investment, you tell people what to invest in. It's much more centralized, much more. So the power of the party remains in the party's hands. And consumption is a model of democratic regimes, in my view, because you take your decisions. So I actually think it's quite ideological, and that's why we're here. So on that basis, if China only has us, this is the new production forces. This is the Xi Jinping's mantra since last year. I produce, he doesn't talk about consume. He talks about, so who is going to consume? Me? But what about if I also want to produce something? No? Then where are we going? So I hear you, but the problem is we're at a point where China's needs in terms of growth engines go exactly on to our end. And if I were an Asian economy, I don't know where you're from, but I don't know. Say I'm from Pakistan. I would also want to have manufacturing. Yes, maybe I get a little bit here, textiles here and there, but I need much more. And what I'm going to do. So I think increasingly the world will have a quest for jobs for its people, and it might not be able to accept, that a single country produces 1/3 of global intermediate goods. So I think the clash we have now here might be a clash elsewhere in the future, especially large countries that really need the jobs for its population, growing population. So I don't think it's going to be us, to be frank. I think it's going to be others, even in Asia. I think there's going to be a clash eventually. But maybe China will be too powerful for us to do anything about it. So might be late, but that's.
And there's one region you haven't mentioned, and we're not going to go there, but it's Africa, where of course, there's a great power competition in Africa. Could say that. The retiring powers, that's us, and the new powers, that's India, China, of course, and
Russia.
a few others, Russia. But you've been very generous with your time, and thank you so much for all your